What's up, YouTube? Welcome to another edition of Automotive Updates. If you haven't been here before, my name is Lucky Lopez, and this is Automotive Life. We talk about everything that's automotive, whether it's reviews, tools, parts, flipping cars, fixing stuff, getting your dealer's license, whatever the case may be we try to do it all. So today we're going to be talking about something that's very, very important, that what I'm seeing actually on the ground level as I'm going through my business day to day is the automotive crisis. I have never seen it as bad as it is right now. Even during the recession of 07, 08, and through then, I didn't see as many bad signs as I do right now. So what I mean by that is, when I first started my dealership, we didn't have a lot of cars. We had like maybe 30 cars, and we were just a small, little operation. And I had about 10 to 15 banks approach me to do business with me. And since then, I've basically built up a network of 27 banks that do subprime lending. I have another maybe 20 that do prime lending, people with good credit. So that was as of last year. I've kept most of these relationships. A few banks have fallen off, with new ones, a few new ones have picked up the baton and moved forward. But as of this month, I am down from 27 banks to just 6. Now, out of these 6 banks, I can still get deals done, but it's incredibly hard. And what I mean by that is, most people don't know this, and I'm going to share this with you so you guys have a little bit of knowledge, is if you have bad credit, the bank is going to charge us for the loan. So when you see people like, oh, well, the price said $10,000, why are you marking up another $1,000? Is because you probably have bad credit and the bank's charging you money, so they need to charge an extra $1,000 to break even. Technically, you're not supposed to do that, but that's what most dealerships do. So let's say you come to my dealership and you have bad credit, maybe short job time, you're going to buy a $10,000 car. Well, the bank's going to look at your credit and be like, wow, he has short job time and he has bad credit. We're going to charge you $2,000, so I'm only going to get a check for $8,000. Your loan is still for $10,000, but I'm only going to get a check for $8,000. And then on top of that, they hit us with a thing called recourse, where basically we're married to the deal. So we're on like a 2 to 3 payment recourse. So if you don't make your first 2 to 3 payments, I have to buy that loan back from the bank. So that's a major risk that's floating around at any time. These people could lose their jobs. They can just say, screw it, they're not going to pay it. And now you're legally bound by the bank. So a lot of these banks are basically making it impossible to get a loan, charging people so high of interest rates, charging the dealers such high fees, and then charging them like extremely high recourse. It's almost impossible in the subprime market to get people approved. Now, I believe everybody deserves a good car, and you should have something that's dependable and solid. But the way the banks are pushing us now, they literally want people to have a newer car with lower miles, but they can't finance over $8,000. So if, let's say, sales tax is $1,500, your doc fee is another $500, and then you got the vehicle, usually you can get something pretty decent. But for some reason, we can't get anything cheap right now because everything is just, the market is insane. Now, this market is all starting to collapse down now that the banks are no longer lending. The cars are starting to sit out there a little more. People are still overpaying in some areas, but I'm just waiting because eventually there's going to be a flood of repos hitting the market after this whole pandemic thing. Plus, with additional of the banks not really lending anything, a lot of dealers are taking their vehicles back to the auction because, once they sit on our lot for about 120 days, we usually take them and take them back to the auction. But unfortunately, at this moment, what's happening is, like I said, the banks are just not lending. They're not giving out money anymore. I mean, I've never had to try so hard to sell one car ever in my life. It's gotten to the point where it's gotten so complicated and so hard to work with these banks that I got. We're actually approaching hedge funds to get money to do in-house financing because we'd rather just become our own bank. Usually you need about $1.5 to about $2 million of portfolio on the books, and then you can actually go to Wells Fargo and borrow money directly from them and become a third-party lender. So that's the ultimate goal, is we want to become our own bank, because I can't believe on how bad the banks have pulled back. And the reason why this is a crisis is people are not able to buy cars. So the automotive industry, the dealership-wise, is going to hurt a lot. The one good news is if you're doing Uber or if you're doing rental cars, you're probably going to see a few ticks up in business. Even our rental side, we've had people where they just can't get approved for cars, whether it's short unemployment, downtime, the whole pandemic thing, whatever the case may be. banks are not approving these people, and so they're going out and they're renting cars. They're taking Uber and Lyft a lot more. So there is definitely areas in the market where you can excel in the automotive industry, but right now we're going to be talking about dealerships. Now, when all the banks stop lending and there's no new banks coming into your town, they basically have a chokehold on what they want to get out of you. So our average down payment last year was about $2,000. Now, most of the people that are coming today usually have about $800 to about $1,200. That's our average. And we can't get anybody in the cars. The dealership, the banks are coming back with, oh, we need $3,000 down, $4,000 down. Now, $4,000 down on a $12,000 car, come on. But that's what these banks are doing. They're requiring such big down payments. They want to be in the car so securely, they don't have to worry about their collateral. And then they don't care. If I'm like, hey, I'm upset, hey, we've had a relationship for 10 years. Why are you doing this to me? They're like, whatever, we don't care. You either take the deal or don't. We don't care. And this is what we're left with. We have nothing. When we had a lot of banks, there's more competition. I could shop the customer to several banks and get the customer the best deal. Hey, you know what? They only want $1,000 down. Can you match that and give them a lower payment, maybe a few percent points lower in interest? Now, there's none of that. I can be like, hey, this bank wants to give me 8%, you're at 10%. Can you match me at 8? They're like, nope, take our deal or basically go kick rocks. Now, if you have good credit, I could definitely help you out in a lot more areas, but even in good credit, it's really tied up. So the subprime market is completely dead. The default rates are record highs. Everything is going through the roof. It's extremely bad, so all the banks are pulling out. But on the good credit side, it's even getting tougher that way. So we've had, we have about several credit unions that do 72 to 84-month financing if you buy a car newer than 3 years. Unfortunately, now they took that program away. They'll do only 60 months. So now it raises their payment a couple $100s, which is no big deal, but then they required more down payment. They required less miles. They changed the restrictions on certain vehicles. Before, like our most popular seller, especially here in Las Vegas, was used luxury cars. Now they don't want to touch any luxury cars. They want to do Fords, Hondas, Toyotas, and stuff like that. They don't want any luxury cars, no Mercedes, no BMW, no Cadillacs, no Audis. They just said that all those loans are defaulting. So pretty much what they do is whatever's defaulting and whatever's doing bad, they like to lump it up in one big sum and just kick it out the door. The downfall is most dealerships build their brand around something specific. So we had, our brand was, $12,000 to $20,000 cars, good cars for people with, either challenge credit, okay credit, or good credit. Well, now we had to completely change it up. Now we're changing to a scale where all of our cars are under $10,000. You only need $1,000, $1,500 to do, and we're structuring it for buy here, pay here, because I believe that once this bubble pops, all the banks, once everybody's allowed to repo again and all the numbers come back in, because a lot of these people, and I'm going to tell you this, and I know there's a few people out there watching, you're spending your stimulus money on the wrong thing. You need to pay your landlord and you need to pay your bills. Instead, I went to the mall yesterday here in Vegas. It was packed. People were shopping. People are going out. Now I know some are tourists, but not a lot. And there's mostly locals. Even when I go out to bars, restaurants, when we go out to the casinos, people are gambling. Stop spending your stimulus money and pay your bills. There is no government forgiveness. People keep thinking that, oh well, they're gonna write off my loan, or they're gonna make my landlord wait, or they're gonna make my mortgage company wait. Forbearances, basically they put you off for 90 days, but then guess what? At day 90 or day 120, they're going to come collect, and they want all of their money at one time. So a lot of the people that we weren't able to repo from, we're out repoing their cars now because they refuse to make any type of payment arrangements. They refuse to do anything to basically help their situation. When they're like basically saying, yeah, I make $1,000 a week sitting at home. Okay, cool. Well, give us $200 of that, and we'll put off your car payment, or we'll forgive one payment and we'll put on the back end a loan. They don't even want to do that. These people are just taking this money and spending it. So, it's driving up the economy, but it's killing the automotive industry. So, because of this result, when this massive, massive bubble of repos hits the market, factor on top of that the banks are no longer lending, so the demand is pretty much going to drop and the supply is going to go high, and then throw on top of that, the cherry on top, Hertz, like I said, filed for bankruptcy. They got 1 million cars that are going to be hitting the market in a few months. So just imagine if you own a 2018 Hyundai Sonata and your car is worth $15,000 right now. When Hertz drops all their $300,000-$400,000 Sonatas on the market, your car is literally going to drop in value. It could go from 15 to maybe 10,000, who knows? So And this is the thing that's going to hurt a lot of people, because now once that drops the overall market level and overall value of your vehicles, it's just like a housing bubble. You're going to be like, well, it's okay. I put $20,000 down on my brand new Tahoe. I'm in a good spot. And then you go to the dealership and they're like, oh yeah, you're $20,000 upside down in your car. And you're like, how? I paid all this money down. And we're going to tell you the value of the vehicles have dropped, just like the housing market. So it doesn't matter how much money you put down. Once the value kind of starts dropping down, already 42% of Americans are upside down in their vehicles. Just add this nightmare on top of that, and it's just fuel for the fire. I mean, so many people are going to be upside down. I probably turn away about 20 people a month because I can't get them into a new car because they're so buried in their other vehicles. They went to some franchise store, they bought a brand new car off the showroom floor, top sticker, plus they were 10K negative in their other vehicles, so they threw that on top. So we had a lady with an Acura, I can't even remember, it's a little SUV, I think it's an NSX, NXS? No. God, NX, there you go, Acura NX. And this lady was $27,000 upside down in her vehicle. She bought it 3 years ago. So keep in mind, she's been paying on it for 3 years, what, $800 a month payments, and she's still 27 grand upside down. That's awful. So that's what we're seeing a lot more and more of today. So once that market bubble pops and depreciation hits and all these vehicles flood the market and start bringing down the overall value of the vehicles, and then demand pretty much dwindles, and that brings down the vehicle values down some more, I mean, pretty much you're going to get some really epic deals when it comes to buying cars here shortly. So if you're in the automotive industry, it's a very, very rough time right now, especially if you're a dealer. But on the lighter side, if you're in the rental car industry, if you're doing Uber, Lyft, if you're an automotive repair company, people are going to come out and service their vehicles a lot more because they can't afford to get new ones. So your industry is probably going to get a few ticks up. Our shop is completely packed. Our body shop's doing great. It just kind of streams along. People crash every day, is what it is. But especially when it comes to purchasing like Highline vehicles. So, you know, they always have this saying, you know, the rich pretty much wait for the right time. They can buy whenever they want. So you're going to see when all these like luxury cars can't sell and people are so buried in their other ones, there's going to be a huge gap. And best believe that all these people are going to go out and buy new luxury cars they've never bought before. They're going to get some exotic cars at prices they've never seen before. I mean, I'm not even going to lie. I'm watching the market to see if the R8s come down a little bit. I'm probably going to jump on one. But that's what we're seeing right now. It's a really crazy time. It's very hectic. I've gone through so many phone calls. I've done through so many Zoom conferences, stuff like that. And the scariest thing is nobody's talking about this. All I hear on TV is, oh, the corona. They're probably going to disannor my thing now, but unmonetize me because I said the C word. But the big thing is that this automotive bubble is bigger than a lot of that stuff, because people are like, oh, well, it doesn't matter to me because I'm not in the automotive industry. Well, I guarantee you drive a car, and I guarantee you take a taxi, a cab, somehow, some way in life, the automotive industry touches your life. And just like your housing market, when people are worried about, oh, well, I'm going to lose the value on my house, you're going to lose value on your car just the same. And then on top of that, as it starts to spread, there's more cars out there than there are houses. So it's just going to touch everybody in different little ways. But this is something that's really bad, and it needs to be addressed, and nobody's talking about it. You know, the government regulations on this Fair Credit Act is pretty much screwed all subprime lenders. What basically happened a few years ago is when they put this rule into law that, you know, we can't go after certain people for certain loans, which is, of course, you don't want to have payday loans and predatory loans going after people. But it's funny, they can still do that. But automotive companies, you can't give certain people loans on certain interest rates, so they cut it. So instead of these people normally being able to get a car and help build their credit and then they could refinance it later, now they won't even do it. Wells Fargo has been fined so many times by the FDIC about lending practices and lending acts and stuff like that. They try to do whatever they can just to say that don't do it. So what does the banks do? They tell them don't do it. And you may not know this, but all these little subprime banks and all these other prime banks, they borrow money from companies like Wells Fargo. So now Wells Fargo tells them, I can't do it, you can't do it, because we're all going to get fined together. So now that trickles down to all the way to your area, where normally people with decent credit, you know, getting back on their feet, you know, can get a decent car for 10, 15 grand. That stops. That stopped as of 2 months ago. especially now with this pandemic, I've had people, they're, hey, I just got my job back. It was right in the middle of tax season, which is our busiest season. I'm ready to buy a car. And the banks that always take these people, oh, is he working or is he on unemployment? Well, he's been laid off due to the whole pandemic, but he's going back to work. He's a good guy. He's been making his payments. He's got some secure credit cards. He's building his credit. Nope, we don't want him. Click. That's it. So now I have to go tell this gentleman that, hey, you know what? You're a good guy. You're building your credit up. You're doing the right stuff. I can't do anything for you. So now he has to take his $2,000 down and go buy a $2,000 cash car off of Craigslist and pray to God it doesn't blow up on him. So, and this is what's happening in our industry. It's literally choking the lifeblood out of it. So like I said, I got the whole doom and gloom, black background, gray chair, me in this shirt, very minimal lighting. It's more of a serious topic. I haven't really talked about like the bad stuff lately, and I wanted to make one where this way at least you guys can see a little bit of what's going on. Now, if you have any questions or concerns, go ahead and put them in the comment section below. I'll try to answer them. Go ahead and hit me up on Instagram as well. If you haven't followed me, it's automotive.life. And once again, if you haven't subscribed, please subscribe, like the thing. It helps the YouTube algorithm. I get so many messages. You can look in the comments like, oh, great information. How come you don't have more followers? I need your guys' help. Share this with friends, like, comment, say whatever. I don't care if you put on the comments and just put pickles or toast or something. At least I know that somebody's watching it and they're listening, and it means a lot to me. So thank you guys so much. We're still on the brink of 5,000 subscribers. So, I appreciate that. We're almost there. I'm going to be doing more weekly content. I just got back from Arizona. I wanted to film this because, like I said, what I've seen there, here, and in California is insane. They just shut down California, so we're not sure if the auctions are going to open back up over there. But stay tuned. I got some more good stuff coming out, and I got some more car reviews. I got some more equipment reviews. I'm going to be going to some shops and talking about stuff. So now is the fun stuff. We're just kind of figuring out almost like a TV series. We have like a chart, and I can't show it to you because it's all scribbled on. But basically, I'd like to build this channel almost like a TV show. So like on Mondays, it's talking about something. Tuesdays is tool talk or tech talk. We're talking about new equipment for the automotive industry. Wednesdays, reviews. Thursdays, maybe something about business. Fridays, whatever. So we're trying to build almost a schedule like that. So now, like I said, I'm going to be doing this full time, 100%. So once again, please subscribe. I appreciate it so much. Hit the like bell or notification, hit the bell, do whatever. Hit everything. Smash as much as you want. Smashing the like button truly is appreciated. Anyways, Automotive Life, IG, we'll see you guys next time.